All right, hello everyone, and welcome to another weekly edition of Stock Market Mutterings. Doug here with the LincolnList.com, and this will be for the week that begins on November 11th. I hope everyone is doing well out there. For those of you that are struggling with your trading, you're struggling with consistency, I'm going to post a link up on the screen that will direct you to our live trade room. Each and every one of you are welcome to trade with us live each day, see how our strategies play out in real-time environment, see how we approach the market. So for some of you out there that are looking for that, there's the link on the screen. This is also where I'll do my very best to take a grope in the murkiness, try to make some sense out of this market, share with you my thoughts, my ideas, my feelings, and I ultimately hope that puts a little bit of money in your pocket. So let's go ahead and get started. We'll begin, as always, with the SPY, and what kind of verbs should we use here? What verbiage? What is the right verbiage to use to describe this thing? Because this sucker just will not go down at all. I mean, the last really solid red day that this thing had was like back in the earlier parts of October, and pretty much since this gap up on the 11th of October, it's just been straight up. It hasn't even crested, not crested, it hasn't even gone below the 10 moving average on a daily chart. Now, when you're looking at these shorter term moving averages and stocks that just walk up that is extraordinarily bullish. The shorter the moving average and the more the stock trades above that, the more bullish it is. And it just keeps clicking away and clicking away. And it's like every piece of trade war news that comes out on this thing rips at 1%. And then every negative piece drops at like 12 cents. Or when it does drop, you get one or two flash candles and up it goes. Like there's been some shots this week. You're looking at an upper chart right here of the last few days. You know, there's been some shots here where you had a nice little flush right here, but you can't sustain it for longer than a half an hour, and then it comes back up. You start out Friday, you get a pretty good solid pull right at the open. Same thing, it just nestles down in around the first hour or so, first 30 minutes of trading, and that's it. Bottoms in and up it goes, and then right in the late day, it sort of just squeezes right back on up. The thing just doesn't go down. Every single dip continues to get bought. The rallies are being bought up on extremely low volume. And, you know, that's just the way this thing is. So if you're kind of looking for a fade or a pullback, you're going to probably see some spots intraday. This is for the people that are trading the futures or looking at this on a regular basis, trying to just get a taste of the market. You know, you're going to get some flushes here and there, but until you get something that can sustain itself for half a day, something that can actually close weak, maybe minus 200 on the Dow or something, but pay attention as we go forward to this 10 moving average. It's also support of 306s, which was the pivot low from the 6th of this week. If you get underneath of that, then maybe we can talk about these moving averages. But right now, it's going to take a little bit of work to knock this thing over. But it's the stock market. Anything can happen at any time. Now, with that, there are some individual names in here. When you look through your watch list, I would be safe to say that even though the market is ramping to all-time highs almost every single day of the week, you would probably figure that most of the stocks on your list are off. Way off of their all-time high. I know you got some things like Apple, but if you take a look at Facebook, you take a look at Amazon, Roku, Shop, and a couple of those other names, Nvidia, they're all a good distance away from their all-time high. So maybe that's something to look at. Now, when we look at individual names, there was a stock I was talking about last week, the almighty Tesla. Yes, Tesla. And you know what? I mistraded this thing. I talked about this breakout right here. Coming up through this range, I'm going to open up this daily chart so you guys can see what I'm talking about. You had this nice little plateau, and this is normally a pretty good trade all the way around, is when you get this earnings gap and it romps the first 2 or 3 days, and that kind of captures all these chasers. But then the stock needs to kind of settle down, take a breather, and it did that. It had some nice sideways consolidation right here for about 3 or 4 trading days. And I thought, you know what, if it breaks out over top of this 319.60s, this is a buy. This is a long. And that's what I did. I took it on this day right here, which was the 4th, and it started to work out pretty good. But then, you know, it just fell apart. Then I came back and tried it again here on the 5th. And it's just same thing. It started that way. You got a little bit of cash flow to the upside. And then it came back and you know, settles in. Then the next time it comes up here, it's just like, I don't know if this thing's going to stick. I actually missed the entry, but it continued to hang up there pretty good. And then it just finishes out the week just romping. So the 2 times I tried it were the 2 times that it actually sold off later in the day and didn't follow through. And the day I kind of miss it, isn't that trading? It just romps right back up to the highs. Now, it's tough to buy it up here after you've already made a pretty solid move. The move I was looking for was that 318s, 319s up to about 330. So it's already done that, and you're sitting here at the close on Friday roughly at 336. You've got nearby resistance at 340, and there's a chance that it does go through that. But what you want to see in this case is more opportunities or more sideways consolidation and then the break. You know, this sometimes on the first go around, especially like on these, the first 2 go arounds on the break, it just didn't do it. It just couldn't get the attention there, and it took it on the 3rd try. So you want to see this thing maybe go sideways, and maybe you can get another kind of pop to the upside. But I think most of the cash or most of the meat has been ripped off the bone here on this one, because as I said, I was looking for the 318 to 330 to 335, which is 10 to 15 bucks. You still may get that here, but you know, it could be a little bit more risky and a little bit more challenging, but we'll watch this and see how it plays out. Now, another stock that I was talking about a while ago, I think it was a couple of weeks ago in Mutterings, is this Keys, K-E-Y-S, Keys. I mean, look at this daily chart. It's like DocU from a week or so ago. Let me put that back up. I mean, this is pretty solid consolidation and a pretty solid move. Now, as far as doing this as a day trade, I'm not sure of just how much liquidity you may have here and how much range you're getting, but it wasn't too bad today. You had a low of 103.50 and moving up to 105. That's not the biggest. It's not like trading at Netflix or something, but there's some cash there. This also might be a pretty good play for swing traders out there. Giving it a couple of days, you might see an earnings run. They've got earnings coming up here. It's 26th. On the 26th, you might get a nice little squeeze or a nice little pop coming above the highs there. But I think this is a stock that you would have to remain patient with, because you're probably not going to get that instantaneous cash flow move that you might get out of trading other financial instruments. But when you look at the chart is pretty solid. So keep Keys there on the watch list. Now, somebody that looks good here that I've been having a little bit of difficulty with, and when I say difficulty, I mean I can't seem to grab it at the right proper moments. I first had the idea, and I may have spoke about this one last week, this Lulu. I even tweeted, I know I tweeted about saying at 192 I would be interested. But when it got to 192, the way that it looked and the way that things were going at that precise moment just wasn't confidence inspiring. So I was like, I'm going to go ahead and do this down in the 188s, because I really kind of thought it would squeeze, I mean, kind of press down to 188. Well, it didn't do that. And it just kind of turned around. And sometimes these things, they turn around, they turn around so quick, or you get busy doing other things and you just kind of miss them. And that's the case here. Now, just like with a Tesla, it's already made a pretty big move. And if I was in the trade, this is the only thing I would be looking for. I would already be out. But maybe there's a couple of sideways days in here, and then you retest the 208. So you've got, from where it sits now, 204 to 208. That's like $4. So for you scalpers or shorter term traders, day traders, there's some cash in here. I wouldn't want to do this like first thing in the morning. Like today's action, or actually for the last day and a half, it hasn't done a whole lot here. It's just kind of been trending sideways, a little ramp, a little here and there. So there's still a move. There's still an opportunity here, but I think some of it's been taken away. We'll have to see. I would like to see a couple of days of sideways action and then a re-gear back up to the highs. And I think maybe if that case were to happen, you could see it push through those highs. If it does this V-shaped rally that it's doing and it just pegs itself right into highs, I can't stand those charts. I have historically a really tough time with those, so I'm not even going to mess around with it. So Lulu, we'll watch the Lulu. And this WYNN here might be something worth a look. Another pretty good looking flag that's sitting up here right now. Needs a little work too. Again, I'm saying the same things over and over again here. When you're running up here at highs and everything seems to be just up 3, 5, 10 days in a row, you kind of get stuck for value. You find yourself trying to scramble for, where can I get the max kind of play? You know, is it buying something that's been sold off really deep like a Starbucks or a McDonald's? or is it trying to get some of these breakouts or picking up the dips? This is something that you might want to look to do that in the attempts that, it comes back up through the 128. And a good stock that's been that way has been Apple, even though, this thing is hella overbought. I've been considering this thing for a short. It just keeps doing the same thing. You get started with a flush, and then you snap back up to high. You get started with a flush, you snap back up in the high. So the last couple of days, last week, last month, actually the last 6 months, it's been a much better buy the dip than anything else. But back to WYNN, kind of keep that. That's what I'm looking for all these to do. I'm looking for these to do some sideways trading, build some intraday bases, and then trade them from there. And going into each one of these knowing that at any moment this could stop. You could have one snippet of a poor headline and down as this stuff goes, or the market just decides at some point it's personally had enough and nobody wants to chase these high prices, because right now it feels that way, that with every day that's melts up. I mean, we're according to what I've got here, I think we've gone maybe out of the last 10 days, we've only had one red open. So if you would have just bought the market at the close and sold it at the open, you would be like 9 for 10. So a lot of traders out there aren't 9 for 10 right now. I mean, that's just absurd bullishness. And again, it's not so much that you hate bullishness or hate bearishness or whatever it is. It's just, as a trader, you're looking for max value. And each time these things melt up and each time these stocks just continue to go up with no pullbacks, it puts the trader in the position that you're trying to search for that value. And that's what we're looking for right now. Where can we make the most amount of money? So if some of these things would come back for a week or two and settle in, you could really, really get heavy there, especially for those that are swing trading. Because if you're swing trading now, you're digging around and you're having to buy charts like Starbucks or, former runners that have fizzled down for a while. But even these, they're staying with their trend, like this one and a couple of others, McDonald's, they're staying with that trend. So we'll try to keep our eyes on all of these and see where things end up. So as always, if you guys need help, I put the link up there a little bit earlier. Hope this Market Mutterings helps you out. As always, if you just want to reach out to me with any kind of specific questions, make sure you send them to me at support@thelincolnlist.com. Trade them well, guys. Until next week, take care.